So we were using the company code Z controlling area ZAR. They have different currencies. ZAR and controlling area has USD currency, whereas the company code itself is located in India. FM area, which is kind of assigned to the company code, is also ZARN. Company is ZARN, and we have field status group. Parallelly, we wanted to create one more company, but yeah, we will do that, or you can probably do that in your system. Then we have certain hierarchy variants, etc., which are more like your standard hierarchy kind of thing. And the funds, government grants and private sources. Funds center. So funds center we saw is where we are booking the expense, where the expense accrues, and you have a fund center hierarchy as well. Then you have budget address, posting address, and commitment items. You have functional area. Then you have funded programs. So let us go through this one by one very quickly. So
The spreadsheet over there, right? On
yeah,
the
yeah. This is uploaded here. Last time were you able to download it?
I have not. I'll check it again.
Yeah, I see here organization structure.
Okay.
So not much change, I guess, since that time. So these are the process flow maps. And if you look at this actually, then the public sector accounting. So you have human capital management. So the SAP has lot of solutions for different types of public sector organizations and human capital management, government procurement. There is one, then public sector accounting, which we are dealing into, which is the funds management and yeah, basically the funds management. But grants management, grantee management is another part of the same public sector accounting. So budget formulation and preparation is the process, budget execution, and then social services and social security. This is probably not within our purview. Government programs, tax and revenue management. This is more for the tax departments. Then public security is for immigration, border security, customs, etc. So we'll go back to our focus on public sector accounting in terms of funds management. BW sources can also be used for this thing. This is how a budget usually looks like. We have the budget estimate and actuals. So just let us look at first the organizational structures, and then by that time we will be ready to move ahead with the latest topics. So organizational unit, as we know, is the financial management area or the FM area, and the organization unit for controlling is controlling area, for financial accounting is company code, and all these are kind of inextricably linked to each other. So any kind of impact on, so an accounting entry in one is triggers an accounting entry into the other two. Generally it starts from the FI or other modules like MMSD, and then it goes into CO and FM also. So funds, functional area, funded program, grants management are okay. So scenario one is where they are not active, and we'll not consider this scenario, but we'll go with the scenario where we have activated everything, and then you can assign one or more financial organizational units to an FM area. So sometimes we observe that there are multiple company codes from a operational perspective, but their businesses are common, or their activities are common. So in that case the control is also common. Operationally they are managed by the similar management. So in that case what can happen is you can have more organizational units company codes reporting onto one FM area, financial management area for funds accounting. So it doesn't really matter where the which company code it is going, as long as it's going to the same FM area. Account assignment elements you have, yeah, this is a good fund, functional area, funded program or grant are using funds management. They must be activated. So we saw that in the SPRO, there is a link to activate each of these, whether you want to use these or not. That is in respect of funds, functional area, funded program, and grant. So these are not mandatory account assignment objects. So there are only two mandatory account assignment objects, that is fund center and commitment management. So with these two, you can post a funds management document. However, if you want some additional information, these can also be activated. So what are the impacts of activating each of these? So activating the fund has the following impacts in control. Yeah.
I remember we spoke about this requirement where they want to differentiate capital funds versus operational funds, and we said we will use something like a commitment.
That is called funded program, if you're referring to that.
The funded program will do that, capital versus operational.
Yes. So for CapEx, you can have kind of a funded program. So which tracks, specific CapEx projects. So what other things we said was the fund center is fine. Fund center hierarchy, commitment items, functional area. Yeah, for CapEx, I think funded program might be a better option. But if you have
Would I?
something in mind, yeah, you can, yeah, tell me.
I actually will start designing this week, and maybe I'll start asking you questions through forum.
Yes.
So that is one. And second question I had in particular was, so they're asking, so in financials we how we can, how the inventory is planned based, right? So is there any kind of impact of funds also on inventory? So for example, if like in financials, there's no cost center impact of inventory, right? It is at the plant level. So I can just segregate plant one versus plant two inventory
Yeah.
by plant, right? So
Yes.
can we have a fund
Yeah,
allocated
yeah.
to?
No, a fund center can be used with inventory because material management transactions are integrated with funds management. So any material management transaction can trigger like inventory transactions or even purchase orders or even purchase requisitions can trigger the funds management standard using the fund center only.
Got it, got it. Okay.
So activating the fund has the following effects in controlling. In addition to posting to CO objects, the fund can also be posted to. So fund, we thought it was more like a source of funds, provides the additional this thing on a source of funds. And a functional area. So functional area is a totally different and integrated concept. So you can oppose the nature of the expense, like whether it's a sales expense, admin expense, and so on, onto the funds management through CO objects and cost element. But strictly, I don't think functional area is more required because it is generally used when you use that cost of sales accounting more in US and some regions. So it gives you a breakup of the nature of the expense of the income or expense items in addition to the GL accounts in a summarized form through the functional area. And funded program has the following effect. So funded programs can be created and budgeted in funds management if the budgetary control system is used. During posting, the funded program is derived from another account assignment object such as the CO order or W. Oh yeah, here this is a differentiation. Like you cannot create funded programs and assign them in financial accounting directly. So I don't have any field status variant which allows me to post to a funded program. But funded programs can be derived based on WBS elements or CO orders. So indirectly, we are aggregating WBS elements or CO orders into specific funded programs. So that is an additional mode of reporting for the CapEx programs that you are incurring. So yeah, this means you can use the funded program to group expenditures according to the functional aspects. Yeah, you can probably group them in any way you want. And then grants is another different topic. We saw that, if you activate grants management, then the grant, you can have some grant tracking as well, but that is an entirely different topic. And although you activate grants management here, unless you have the elaborate setup of grants management being done, it won't flow into funds management. Activation of the, so yeah, I think okay. So yeah, let's finish this. They have described what is fund center, what is each of these. So let's quickly go to that and then we will come back to our main topic. So they have defined each, and since we had questions and now with better understanding of that. So this lesson will explain the organizational unit within an FM area, which represents the structure of an organization, like areas of responsibility, departments, projects. So fund center is, I would say, similar to a cost center, but it is a grouping in a way in which you want it to report it to the government, to the authorities who are controlling this show. So cost center reporting is more from an operational perspective. It's more for the internal management of the organization, whereas this is more from a statutory perspective, in the sense the people who, in case of public sector management or in case of certain entities which have a higher degree of control over the funds. So you can have a structure of the fund center. So, but it is, if you see the logic, it is very similar to the cost centers, that areas of responsibility, departments or projects, but they could be slightly at variation. So even finance department is usually a cost center in most cases, or human resources. But I think the main difference is that you could have an alternative way, alternative hierarchy for your funds reporting, which is for a very specific purpose, and therefore it may not be at such a detailed cost center. And the same logic, yeah. So yeah, you can maintain the name of the person responsible, and the hierarchy can be year dependent. So for each year, you can have a new variant of the hierarchy and a new hierarchy. Period of validity, because this period of validity controls the hierarchy. And then you have commitment items, which again is very similar to GL account, but again, it may be at a more higher level, because, if you take the example of travel, generally in the GL, you have various setups like travel, basic allowance, travel, airfare, travel, your daily allowances, travel, lodging, travel, meals, travel, so on and so forth. Usually there are around 10 accounts. But at this commitment item, the person may not be really interested, the person who is reviewing these reports, that how much was spent in meals, and because he's not in operational control of these things, so he's more looking at from a government or a statutory perspective. So we may have a different level of commitment items. Commitment items are usually at a higher level than the GL accounts, but there is no harm in having it at the same level of GL account also, in which case it will be exactly same as the GL account. Some commitment items are directly postable. That means they can flow from either FI, or you can have direct reallocations, etc. in commitment items. Some items are not directly postable. And then you have these groupings, like in most cases we'll use 30, but for goods receipt we have another one, and then for the payable and receivable posting we have another, and then the last two are more specifically for the cash related postings. And then coming to the fund, so here we'll explain how to maintain the fund master records. And the fund represents own external funds that are limited time wise by the financing period, and the functionality, that is application of funds which have been designated for a specific expenditure. So if you take the example that suppose Ministry of Finance is providing you funds. So either Ministry of Finance itself could be a fund, but generally you see that when Ministry of Education, when they have seen that they have different types of funds, that is one for the building maintenance fund, then one is the teachers salaries funds, then one is the library fund, then one is the there's so many kinds of funds are said. So generally the linkage is between source of funds and then some kind of link. So the fund would be library fund, and the fund center would be the different departments in the library, and along with the commitment items like your salaries, books expenses, cleaning expenses. So combination of funds, fund center, and the commitment item would give you a complete picture of where the fund came from, which item of expense it was used, and where exactly it was consumed. So this end-to-end linkage can be established. Because why fund is required in addition to the fund center is sometimes the reporting is driven by purely the fund. So how much I received in the fund, how much I spent in the fund. So within that fund, there may be for several fund centers. Like within the library, there may be a library general book fund center, and there may be a library admin fund center. So this kind of flexibility is there because one is the source and one is the application. Budget period, we know that budget period is the period for which the budget is created. And then the functional area. Okay, so functional area is kind of a thing that is used across different this thing, not only in funds management but even among in different areas. So functional area they given an example here. So functional area helps you to reclassify expense into appropriate buckets like sales, for example, admin, then depreciation, at the high level buckets. But I don't really see a very strong case for functional area being used, because if your commitment items itself are at a sufficiently higher level, then you don't really need functional area. But maybe some additional classification of the nature of the expense can be provided through the functional area. And then we come to the funded program. So this lesson will explain funded programs, which are programs within funds management and an operational purpose and defined time frame. So yeah, I think we have not created a funded program yet. So once the system is active, let's try to create a funded program. Okay. So funded programs with an operational purpose and a defined time frame. This can also range from simple activities to complex projects and can cross your organization's fiscal years, funding sources, and organizational units. Examples are facility modernization, financial system replacement, park beautification. Yeah, and I think it will really help once you start creating the model, because you also come with a lot of practical aspects of that, and we'll definitely be able to brainstorm a little bit how best we can do it. And in the end, SAP is always flexible in terms of structure, so it can never be like a best solution but we can always brainstorm so that we can arrive at a good understanding of what functionalities offered by each of these things. So here you can see that a footpath, and then you have FM derivation tool here. So this will help derive the footpath from the either the WBS element, that is the projects which are created for footpath, or from the internal order which is created. So it's quite possible that an entire project is creating from building the footpath, and then it creates of several steps like digging the footpath, then laying the concrete on it, and then beautification of the footpath, and then planting trees on the side of the footpath. So these can become the WBS elements in that case. And these WBS elements you can derive, you can point in direction of the funded program. So unfortunately, I think again it is a summarization alternative, because you already have the WBS element flowing into your reports of the CO and again the project systems. But in funds management, you may want to have a nice name or a short name for a lot of different WBS elements, and that level of detail may not, is not required to flow here. So we can have that kind of functionality. And then going back to this one, yeah, we saw all this. Then funded program, this is what we are going to see. And then we saw the budgetary control system. We have budget structure and we have the posting addresses, budget types. So primarily we saw how to create a budget, how to release the budget. For availability control, how to see a report of the budget versus actual, how to book an actual entry into the budget. Then I think we saw earmarked funds also, right? Earmarked funds actually going to go to the next. Yeah, earmarked funds we saw, but we are going to go to more specific things like, in that earmarked funds, and then how you can actually set aside a certain amount of funds through various ways. So that is going to be our next topic we are going to start. And then you have tolerance profile, status management. We saw that, status management can actually help you to lock the budget for further posting. So based on the user statuses that we defined, we can either have certain activities open or we can have certain activities locked. And these budget profiles will then flow into through the authorizations to the users. So users will be either allowed to enter the budget in a particular version, or after the version has been frozen, then they will not be allowed to enter anything further in that version. This we saw is the end-to-end cycle of that. First we created fund center, then we created budget address. So this is also, we are using the second option, that is we are creating the budget addresses. We are not using, so budget address and posting address is not a mandatory thing, but it helps you to control, where you want to actually, which combinations you want to create the budget. Otherwise, if you don't use budget and posting addresses, then it's quite possible that different people create budgets using different assumptions, and some budgets may be then created without the use of, for example, a functional area. Some may be created with functional area. So that is where your creation of the activation of the budget address and posting address helps. That means you can create budgets and you can post actuals in funds accounting only if the budget address exists. So you cannot randomly post in any combination of account assignment elements. And then we saw this report of the budget overview, then, budget, release the budget data, how the budget is used, then book the actual transactions, derive the FM area, derive the account assignment objects, then transfer documents from financial accounting. Yeah. Okay. And we also saw that if we do planning in a normal cost center planning, or if we do planning in BW, then those things can be copied over to the BCS control system. So there are certain programs like FMCY copy underscore CO, where you can copy things from there to BCS. We also saw the master data copy program. So you want to copy over, like, for example, cost center to fund center, GL account to commitment item, then you can actually do this. But what I would recommend is that, there is also nowadays this LTMC tool is available. So we'll check whether, the LTMC tool provides for an upload template. So for commitment items especially, which would be very large in number. And if such a tool is available, then that template is probably the easiest thing to use to upload, create master data, because then you don't have to put hundreds of restrictions. Because if your cost center, generally it will never happen that your cost centers and your fund centers are exactly the same, because then you don't really need funds management. You can get all the reports in cost center accounting only. So generally your structure is going to be different in funds management as compared to what it is in costing. So once the system is up, we will look for that, and we'll look for how to fill in the template also. Yeah, so mass creation. So mass creation, although the internal tools are available, we saw some of those tools, but there is a lot of logic to be put there, like what should actually get converted to what, whether you want, we want to create from WBS, whether you want to create from internal order, whether you want to create from cost center. So that is one way, but the second way is to use LSMW or LTMC templates and create the commitment items from scratch. So that would be a very easy way of doing, rather than, using the standard programs to copy over. We will also see that when we create a PO or anything, does it get, copied to this thing. So we saw 1, 2, 3 budget structure, budget control system, budget planning. Okay, cash desk will come to in the end. It's a bit complicated. Availability control we have seen. Yeah, we can start with these things like earmarked funds, orders, cover eligibility, etc. And then we will also refer this material, because I see most of these are taken from this material itself. So it will be good to refer to this material also. Yeah, so this comes back to the same thing, that design the core process of earmarked funds. So the process step for budget execution are divided into earmarked funds and our commitment documents posted from and debit position where requests or invoices in the definition process. Funds can be defined with or without the component materials management. So we generally would prefer to have, the thing defined with material management, so that all the material management transactions are also getting impacted in the funds management. So what these people have provided, I mean, what the funds management has provided is there is something known as earmarked funds. So when you have some funds allocated for, or a budget allocated for a particular combination of account assignment elements, then you may have already decided that I want to use a particular portion of it for a particular thing. So in that case, there are various stages of earmarked funds that can be applied in that process. So you can actually carve out a certain amount and put it aside as earmarked funds. So this earmarked funds, we can have a kind of a specific name to it. And when you actually go to the, so earmarked funds will then again be with the same thing. It will be with the underlying budget address, and that budget address will then be called in that earmark fund. So when you post the accounting document, then you can do it with reference to a particular earmark fund. So I don't want a situation in real life where certain funds were allocated on an annual basis, and suddenly we realize that, oh, we had an important project which was decided beforehand, and suddenly we come to a situation where I don't have any funds for that particular project because my other expenditure got overstepped, and it exhausted all the available budget. So we can, you can carve out specifics from this into the earmarked funds. So let us see what kind of earmarked funds are there and how the cycle will process. So this chart, if you see that on the one side we have the revenue budget and we have the forecast of the revenues, and what is the actual event that will convert that forecast into reality is the customer invoice or the acceptance request or the acceptance of the invoice from by the customer. So that is on the revenue side. But on the expenditure budget, you have various stages in which you can, even before the invoice comes, or even before the vendor invoice comes, or even before you raise the purchase order to the vendor, you can have like various stages of the earmarked funds. And what are these stages? Is that in the first step, you can do blocking of the funds. In the next step, you can do funds reservation. And each successive level would probably be with a greater level of detail, a greater level of certainty, and a greater level of granularity than the previous level. So again, if we go back, is that you have the funds blocking, then you have the funds reservation, then you have the funds pre-commitment, and then you have the funds commitment. Now, funds commitment would normally flow from the kind of, a definitive purchase order, a definitive document in SAP, which creates a commitment to buy that particular item or to incur that particular expense. And the last step would be the vendor invoice or the payment request, which, you know, kind of freezes that into a formal accounting document. So if we look at this graphic again, what we see is that not only does it go forward, but there are also backward arrows coming. So naturally, it means that you create a funds reservation, but when you create a fund pre-commitment, you release the reservation to avoid duplicate accounting. So funds pre-commitment should is more certain than a funds reservation, and it should kind of release any reservation created earlier. Although I think, and we will see that in the examples, it is not mandatory that you follow this process, because these are, although they are successive in nature, if you have a greater degree of certainty and you place the purchase order directly, then you really don't need to have any funds reservation or a funds pre-commitment, or because it directly you have made the commitment of funds in terms of a purchase order. But sometimes you don't have that certainty, then you could go to the previous step, which is the funds pre-commitment. Even that level of certainty is not there, you could have one more level, which is funds reservation or blocking. So these are kind of successive steps that we can do and call in each other's transactions. So you have a release of one and going to the next level, and ultimately reserving it, ultimately resulting in the particular expense getting incurred. So let's say what additional information we have here. Process steps for the budget execution are divided into earmarked funds and our commitment documents from and the debit position via request or invoices in the definition process. Funds can be defined with or without using the components material management. In both cases, the controlled availability of an existing budget record is important. The definition is displayed in funds management using the chain of earmarked funds documents without materials management. So let's go through what this material has to say. Forecast of revenue, funds blocking, funds reservation, funds pre-commitment, and funds commitment are grouped under earmarked funds documents. With these documents, an earmarked fund process can be displayed with the references shown above. The process can start with each of the document types and you can select the number of levels. So yeah, as they rightly say, these are the number of levels in the same process. So you may or may not like to have all these levels. So you may want to just go with one process, because if your cycle is short from the planning to the execution, then it will be really meaningless to have so many steps in the process when when your expenses are more or less certain, where your cycle is very predictable. Then there is no need of going through so many steps. Earmarked funds can be parked, and incorrect and incomplete earmarked fund can be saved without checking with the function park. Okay, just like your accounting document, when you are not sure whether I want to enter this particular earmark fund. After you enter it, you think that let my supervisor see it first, but let me first get the confirmed estimate from the vendors before I enter the earmark funds. So there may be various reasons you want to put a placeholder, but you want to review at the end of the week how many placeholders you have put and then refine those placeholders. So there is a parking functionality available in each of these pre-commitment documents, reservation documents, and earmark funds can be parked as well. A forecast of revenue. So if you see on the left hand side here, there is one thing called forecast of revenue, and this is a different, excuse me, different process, slightly different process, but similar to funds commitment. So it works exactly on the revenue side, but it is again similar thing that you are anticipating certain revenue and which may or may not happen, but you want to kind of have that committed revenue in your system. So forecasts of revenue, funds reservations, funds commitments can be referenced by requests and financial accounting documents. Yeah, and this is a very important thing that, okay, so when you imagine a particular setup, of a, let's say, a library department of an educational institution, and they have a certain budget which flows by your fund center commitment items etc route. But the ordinary person who orders the books, ordinary clerk who orders materials for the library, or who incurs expense, he may not have visibility of all these things, like fund center, which fund center to use, which jail account to use. So accounting can help him by giving him one earmarked funds number where he has already estimated and blocked a certain amount of money, and also placed it in a firm account assignment object setup. So he has identified that out of the total budget of 1 million, I want 20,000 to go to new book purchases of a particular subject. So he creates an earmark funds with the right GL account, with the right fund center, with the right additional account assignment objects, and he creates the earmark funds number. And when the person who actually orders the books, he just goes ahead. So he probably fills in a form, which could be online or which could be a manual form also. Nowadays, everything is online, but some old institutions may still use the manual process for forms. So when he fills in a form, he just calls up finance and he says, yeah, just give me the earmark funds number for my book requisition. So that person will give him the earmarked funds number, and then he will fill up the form, get all the approvals either online or offline, and then he will actually send it back to accounting. So what accounting needs to do is just trace that earmark funds number and assign the expense or the purchase order to that number. So this earmark fund concept, I feel, is more from a operational perspective. It's more to ease the operations of that particular organization, and kind of provide a workflow, and instead of asking the layman to fill complicated details, it just provides him a single number. So continuing that, this referencing leads to a reduction on the earmark funds document. So once the fund is consumed, earmark funds will be reduced and the actual expenditure is naturally booked. Funds blocking is a special kind of commitment with which individual budget values can be blocked for further budget execution. Yeah, so it's kind of a temporary block. It kind of reserves the budget for a particular use at a higher level. So funds blocking is a special kind of commitment which the individual budget values can be blocked for further budget execution. Funds blocking cannot be referenced by follow-on documents. You can also take into account expected revenues and the funds linked to them using forecast to revenue. Okay, so earmark funds. So when you earmark funds, let's try to go back to this presentation. Yeah, so this is the graphic which we just saw in the previous this thing. Forecast of revenue, funds blocking, funds reservation, funds commitment, pre-commitment, fund commitment under earmark funds documents. With these documents, an earmark funds process can be displayed with the references shown above. The process can start with each of the document types and you can select the number of levels. Pretty much same what we. Earmark funds can be parked. An incorrect or incomplete earmark fund can be saved without checking with the function park. Forecast of revenue, funds reservation, and funds commitment can be referenced by requests and financial accounting documents. Can be referenced by finance. So whenever an earmark funds is created, it will create a document number, it will create a earmark fund document. And that document is like the funds parked in that earmark fund. And this can be passed on to the people to consume the budget. So forecast of revenue, funds reservation, funds commitment can be referenced by requests and financial accounting documents. So request means purchasing request, any kind of request which consumes budget, and the subsequent financial accounting document of course will consume that budget. So the referencing leads to a reduction on the earmark funds document. So whenever you reference an earmark fund document, that budget is consumed, and if you take a report, then the earmark funds will be reduced to that extent. Okay, so this is the graphic which we saw here. So funds blocking, funds reservation, pre-commitment, commitment, forecast of revenue. These are the categories. So these categories are more like really don't, these are derived automatically because there are different document types for each of these processes. Yeah, so here you can see document type, user defined document types can be there. Then number ranges, field status, reference type, workflow relevance. And if you want to print a form, you earmark some funds, you may want to print a form and keep it on record, or you may want to circulate it among your department that these funds are earmarked for this specific purpose, and you can consume it using the reference of the earmark fund document. So these documents can be printed just like your accounting entries, and there is a Adobe form provided for the purpose. And this will ultimately post a document, which is like the document type here. Each of these, there is a different document type. And then the document date, posting date, company code, document number. So this is not, of course, an accounting document, because this is just kind of a, as you know, a reservation. So we are creating a reservation for something, but we are not actually consuming anything, or we are not actually booking any expense. You can define different document types for each document category. So we talked about these four categories here: funds blocking, funds reservation, funds pre-commitment, commitment, and forecast of revenue. So for each thing, we can differ. So this is more from a reporting perspective. So you will know that different document types, you can call the report for a particular document type, and there are different number ranges, field statuses, reference types, workflow relevance, etc. So each document is different, and some of these requirements can be customized to suit each kind of document. You can use Adobe Forms for printing earmarked funds documents in addition to forms created by SAP Smart Forms. So, as we know, SAP Smart Forms have been there for a really long time, and SAP has provided several smart forms we use in like payment advice forms, correspondence forms, voucher payment, voucher printing forms. These SAP scripts, these SAP smart forms, etc., are available as part of standard SAP. So, in that respect, Adobe Forms more flexible, easier to program, and they have better quality output as compared to SAP script, or even as compared to SAP Smart Forms. So Adobe Forms are the next level in terms of SAP printing. So SAP is providing Smart Forms as well as Adobe Forms. Now it is up to the technical ABAPer to take a call, which one is easy to use, and accordingly configure the right form. If you want to use Adobe Forms for printing earmarked funds documents or earmarked funds, you have to link a PDF based form to the document types based in customizing. Again, this is a call for a technical person. A body define document types for reduction by other documents for reducing earmarked funds. Define which document types such as funds reservation, funds payment can be reduced by FI documents and documents of the invoice check. Yeah, so if we have defined a particular sequence of documents, then you don't want somebody suddenly consuming budget from the lowest level document. So you can define which type of, which document types are allowed to be reduced by FI documents and MM documents. So not all, only the highest level of that will be allowed to consume the budget and actually post an FI document. This also permits you to reduce funds pre-commitments, which is not permitted in the standard system. Let's go back to this. Okay. Yeah, so document types. So business add-in body. Define document types for reduction of by other documents for reducing earmark funds. So this is a body, this is a business function that can be implemented using ABAP. So this is something which is, over and above what this additional functionality. This also permits you to reduce funds pre-commitments, which is not permitted in the standard system. So funds, again, we come back to this funds reservation, pre-commitment, commitment, and forecast of revenue. So these are the different document type. So what all activities can be done with this? So one is that it has the completed indicator. So just like similar to your technically completed indicator in the order, we can have a completed indicator in this funds document also. So once this completed indicator is applied, and by the way, you can reset it back also, just as you can do in PP order, or you can do it in your C order. So once your completed indicator is applied, then you cannot do any transaction on that particular document. That is kind of frozen. So generally that would happen when that document has been entirely consumed, or for some reason you want to discard it and create a new one. You want to totally abandon it. So this one functionality is there. Then another functionality, is that this one value adjustment required. Suppose you do earmark funds and you later on realize that it was much more than what I wanted to do. So you can actually do a value adjustment. So you can return the funds, but provided the setting value adjustment required is enabled in that document type. So again, I think it's this could be just some customization features, completely dependent on the client requirements. So if you want it is you can have these. It's more like a matter of control. CO integration, yeah, CO integration available or not, no carry forward at fiscal year change. Okay, so we are yet to see the carry forward process, and that will be the last thing in our this thing, that a budget of 1 year which remains unutilized can either be carried forward or not carried forward. So that depends on whether the organization is allowed to carry forward budgets of 1 year to the next year. And again, that depends on government regulations and so on. So many government departments actually have the incentive to consume all their budget in the current year, even if they don't require it, because it cannot be carried forward. So these things can be customized in those documents via specific settings. Account assignment can be changed. So suppose you have a particular earmarked funds of 50,000 for a particular purpose, and then you realize that the account assignment was slightly wrong. So whether you can change the assignment or not. Then the next one is the statistical indicator. That means that whether this order is statistical or whether this funds commitment is statistical or real. So generally it would be real by default, because we are consuming budget against it. We are carrying it forward to the next step. But for some reason, you want to just have it like a sticky note on your desktop. I don't want any transaction to happen, but I want to make a note of it. So then in that case, you can tag it as statistical. So what will happen is that it will not actually impact any financials. It will be there just for reference. It is just posted there just as a statistical thing. And the last one is the overrun tolerance. So actually, I think the overrun tolerance should not be there. Again, if you're trying to control the budget, but again, it depends on the organization. If certain organization allow a certain percentage of overrun on the earmarked funds or on the budget in general, or it might happen that he has entered an approximate amount and he's okay to go about 10% above that what he has entered. So in that case, he can maintain the tolerance level at 10%, and then the even if it exceeds by 10%, it is fine up to that amount. So these various settings are available in the documents, and these will control what you can change in the document, which stage you can change it, or whether you cannot change it at all. CO integration, what it means, if a CO account assignment is entered, the funds commitment also posts a commitment amount in CO. Okay, so CO also has commitment management, and well, this kind of have some integration with CO that posts commitment in both CO and funds management. And then the completed indicator, you can set the completed indicator at a document level, header level. So it applies for the whole document, or you can set it at the item level. So one commit earmark funds document, it's not necessary that it should have only one line item, one combination of account assignment elements. It can be for several account assignments, several commitment items, for example. So this completed indicator, if it has been flagged, then you cannot more make any more changes to that document. So the funds that were not consumed are re-entered in the budget and can be used again. So if the document is complete, then whatever was unutilized will go back to the budget. But this indicator, there are two ways to set it. One is at the header level, which means that the entire document, all the line items are now frozen, are completed, and whatever remains goes back to the budget. But if you want to flag it at an individual line item level, then you can do that as well. And in that case, the whole document is not closed, but only that particular line item which you closed is closed. Block document. If you block a document, it cannot be posted to. Yeah, this is very simple. If you block a document, it cannot be posted to. Then statistical indicator, items that are flagged as statistical are only entered statistically, no budget is consumed. So we saw that You want to enter something just for information or keeping placeholder or keeping track of the same, but you don't want to consume any budget for that earmarked item. So as see each of these documents, earmarked items, whether it is a pre-commitment, whether it is whatever, all the four types, they are consuming the budget. So they are actually the commitments against the budget. So if we want to enter something that does you don't want to consume the budget, then you can enter it as statistical. But then that in that case, what will happen is that you can definitely not create a purchase order by consuming this statistical item, because it is statistical. It is only for information. You cannot, it's not a real thing to be consumed. Suppose I enter at the commit level of commitment item of, particular GL account, a particular cost fund center, and a particular functional area. But I don't know whether exactly it will be consumed under that particular account assignment. So I may say that account assignment is flexible. You can change it. That means if I raise the purchase order, I can change the fund center, or I can change the commitment item, or I can change the functional area, I can change the funds. So that kind of flexibility it gives to change the account assignment. No carry forward at fiscal year change. So with this indicator, you disable the carry forward to the following year. And a value adjustment required. With this indicator, you determine that a document can only be changed by value adjustment documents after a certain time or event in the original document. The indicator can be set manually or by workflow. Yeah. So if you want to change things in the document, especially the values, then you can do it via the value adjustment, and indicator can be set. So you have workflow options as well. So any change needs to be approved by somebody. Then you can set it up into workflow, and then you can go to the next level, and that person can approve it. So yeah. So here they have given an example that the overall amount 5,000 is entered, and value adjustment required is checked. So manual changes are not allowed. So if the value adjustment required is not checked, you can just go into the document and change the values. So I can make it 4,000 or 4,000, but this is not a good process, because you will never be able to keep track of who did the changes. So a good process would be that you don't allow any manual adjustments, but every adjustment should be tracked via the value adjustment. So it should be tracked via the another document of a similar nature. To prevent corrections being made to the approved original amount, you should ensure that the value adjustment required flag is set. You can set the value adjustment required flag manually or via workflow. When the flag is set, changes can only be made to the document using value adjustment, and manual corrections are no longer possible. And yeah, so okay, let's continue at this, and then we'll logically take it from there. So we'll have some recap of this as well, and then we can continue from there. Okay,
Okay.
right. Yeah, thank you, sir.